Both Adobe and Salesforce, this is unusual. They're great companies, and their products are good. Nobody cares anymore because these are the ones that people think are just being blown up by AI. So these are the ones that are real casualties.
Look, Adobe is probably the most hated stock by institutional investors right now. Plus, with the generational downturn in their stock price and the SaaS apocalypse that's going on right now, they're like the dinosaurs that are facing off against the meteors. And despite beating earnings for another quarter in a row, taking a look at this section right here, I mean, they beat it in this last quarter, they beat it in Q3, Q2, Q1 of last year, their stock still went down. I think that's the story with Adobe in general right now. But this time around, it was specifically due to their CEO stepping down. I mean, if we take a look at their stock price quickly, I mean, over the last couple months, I mean, year to date, they're down 24%. 6 months, they're down 30%. And then over the last year, they're down almost 37%. It's definitely been a terrible time for Adobe investors right now. And the $1 million question is Adobe a value trap right now, or is it a generational buying opportunity? So the plan for today is to discuss the bull case and the bear cases for Adobe, either to see if it should stick around and it's undeserved of this low valuation, or if this is a value trap. I mean, taking a look at this slide right here, I had AI prepare this to make it a little bit prettier, but overall, you can see that Adobe Firefly, which is one of their AI tools that is really popular, is giving users capabilities of right in Adobe software to be able to integrate and use generative AI. We can see another point is just how historically low their valuation is. Their PE ratio right now is at a historical low at 15 times forward PE, and their profit margin is continued to stay strong at about 30% profit margin. And another bull case I want to highlight for Adobe is the fact that they have such a strong backlog of revenue. If we go back to Qualtrim, we can quickly take a look at this chart over here for their KPI performance obligations, and you can see how high Adobe's demand is for their future obligations. So based off of something like this, it goes to show that there is continued demand, at least for the foreseeable future, for Adobe products, and customers are still lined up to be buyers. Next up, I want to talk a little bit about the bear case. One of the things is just that AI is disrupting their business. For example, management admitted that for their stock photos section of the business, they've seen a decline of over $70 million just due to people using things like OpenAI, Nano Banana, and others to generate free AI images instead of having to pay for those stock images. Another thing that's facing Adobe right now is the fact that they're transitioning their revenue model to be from a licensing basis to a tokenization consumption basis. This isn't necessarily a bear case, but it's a very delicate process, and if handled incorrectly, it can lead to disaster. I wanted to share with you guys another slide I had AI cook up for me. This one kind of goes through like differences between using the license-based revenue model versus a token consumption-based revenue model. Taking a look at this slide, we can see that there's 4 primary differences between a subscription-based revenue model and a consumption-based revenue model. One of them being payment basis. When you have a license, regardless of how much you use it, you're paying a fixed monthly or an annual fee, whereas in a consumption-based revenue model, you're usually paying per use, aka the tokenization. Subscription-based model, you have a set number of licenses that you have to purchase, whereas in the consumption-based model, instead of having a set number of licenses, you're just buying tokens. So whether it's one person using it or 100 people using it, you still have a set number of tokens. And then for licensing revenue, there's a lot more predictability in terms of revenue based off of how much licenses you've sold. Whereas, for a consumption-based model, whether sometimes clients need a little bit more tokens, maybe they need a little bit less for a month, the volatility is a little bit higher, so there's less predictability in terms of revenue. Now, the rationale of why Adobe is trying to switch from a subscription-based revenue model is because of seat compression risk, whereas the reason why they're trying to change to a consumption-based model is because of the monetization opportunity. If they're able to really pull this off, there's more AI tasks, the better AI gets, the more tokens that Adobe will be able to sell. So I guess instead of a true bear case, it's more of like a gray case, if that makes sense. It's not really a bear case, but it's not really a bull case right now either. It's kind of a wait and see situation. Going back to the investment bear case slide, we can see the last thing that I wanted to bring up is the competitive headwinds.
I kept thinking it had to stop going down. I'm wondering whether Adobe keeps
Do you think not getting Figma was a blessing or a curse?
Figma was way too high. I think not getting Canva, they need to be
Yeah.
Canva's what you have to
Yeah, yeah,
need
yeah.
that both.
Right now, Adobe is facing quite a bit of competition, whether it be from AI, whether it be from other companies like Canva or Figma. They're AI-powered low-cost design platforms. They're eroding the market share. All these different AI headwinds are adding to Adobe's increased margin compression. So right now, Adobe is having to spend more and more money on CapEx just to keep up and just to continue to sustain their moat. Personally, I think there are definitely better bull cases than there are bear cases right now for Adobe. But the bear cases can be really significant, and I can see why the market is really worried and really scared about what's next. It could be a massive discount right now, or it could also be a value trap. My personal opinion is that Adobe right now is in a situation of wait and see. Even though they're trading at $250 per share, it's not like a blind buying opportunity like Google was last year. So for me, for next steps, I'm going to be seeing who the next CEO of Adobe is going to be. I want to make sure that they're hiring the right person who has experience with AI integration and is specifically product focused to make sure that Adobe is able to make this transition from their licensing revenue segments to their tokenization revenue segment. But as always, I want to hear from you guys. I want to know if you're buying the dip or if you guys are waiting and see like me right now. But either way, let me know in the comments down below. And remember, keep drinking that water. Thanks, guys.